Hey, thanks for joining me on this video. My name is Jason Sen. If you don't know me, I started trading on the London Stock Exchange floor in 1987 when I was 19 years old. About 3 years later, I moved over to the floor of the London International Financial Futures Exchange in the early 90s, and I traded in the open outcry pits there until the end of the decade. And since then, I moved over to trading on the screens when all the markets went digital. And so I've basically been doing that ever since. About 35 years to date that I have been involved in the financial markets. Over the last 15 years, I've been providing signals and technical analysis to banks and independent retail traders, and that business has certainly been doing very well for me. Through that process, over those 35 years, basically, when I started all those decades ago, well, firstly, the internet didn't even exist. Smartphones didn't even exist. Mobile phones were just coming in, but they were rather brick-like large objects. So I've really seen technology explode in my lifetime. And when I started, of course, there were books about trading, but there was no videos and no courses that you could really go on, nothing online anyway. Basically, it was a real trial and error. You were thrown in the trading pit with your own money, and you either made money or you lost money. You had to learn really quickly. And as I say, it was very much by trial and error. So over the years, I've made loads of rules. I've ended up writing loads of books for my own benefit so that I can remember all the rules. And I've also published these now. A lot of them are free. I've just decided to release them for free for my YouTube followers. And I'm going to go through some of these in a series, and I'm going to talk about what's in the content of the book. And then in the description box below, I'm going to give you a link. Click the link if you want to receive the series of 6 ebooks for free. I'm going to ask you to answer 5 simple questions. They're going to be either yes, no, true, false questions. It's going to take you 5 or 6 seconds, just so I can learn a little bit about how your trading is going. Give me your email address, and then I'll send you this series of ebooks over the next 2 or 3 weeks. You'll also get an opportunity to book a free mentor call with me. So you can actually talk to me book it up, and we can talk about your trading and perhaps ways that I can help you improve your trading. It's all free, no charge. It'd be interesting for me just to meet people and see how you're getting on. Okay, so this book, in this ebook that I wrote, it's called The 21 Rules of Survival. Some of these rules will be in my Golden Rules of Trading and some of the other books that I've written, but it's good to go over them again and reinforce the message because we do all make the same mistakes over and over again, don't we? Well, I know that I do. Here's the 21 rules that I have taught myself by failing consistently through my career, making all the mistakes over and over again, kicking myself, and I'm going to hopefully try to help you not to do the same thing and keep making the same mistakes over and over again. We have to make mistakes. It's how we learn. It's how we learn not to do it again. But let me try to help you to understand why you shouldn't make these mistakes. Okay, so my first kind of rule is to identify the trend. I am a trend follower. So when I'm doing my analysis, the first thing I'm doing is looking for the trend. I'm looking for the trend on the weekly chart, the daily chart, the 4-hour chart, the 1-hour chart, and I will follow that trend. So if the market is clearly in a bull trend over those time periods, I will be looking to either buy on a break above a resistance level or buy as we dip to a support level. So make sure you do identify the trend and always trade in the direction of the trend. For that reason, my second sort of rule is that professional traders buy because prices go up. Now, the amateur trader will see the market go up, think, oh, we've gone up, we've got to come down, so I'm going to sell it now. Well, actually, going up means you should probably be buying and buying more. Stock markets obviously have been, well, I'm talking to you in the mid sort of 2022, and stock markets had been going up for a very long time. We're going down this year, of course, but if you've been buying stock markets over the previous decade or more, you'd have been doing extremely well rather than thinking we've gone up, we've got to go down. So trade in the direction of the trend, and don't be afraid to buy when markets break above previous resistance levels. This is something I haven't done for a long time now, but I don't know whether you've done this. Have you had it in your head, for example, to be like, right, I'm going to buy whatever it is. Let's say we're trading gold. I'm going to buy gold this week. Gold is going up. Gold is in a bull trend. So I'm going to look for opportunities to buy gold. I'm going to buy gold if it breaks above this resistance level. I'm going to buy gold if it goes down to this support level. The market goes up. It shoots up. You miss the opportunity to buy. Maybe it's rocketed too quickly. You didn't have a stop to buy order in there. Whatever it is. Let's say gold's shot up and you're now looking at it. You're kicking yourself because you didn't buy gold when you should have done, and you now think, well, now gold must have gone too high. You're getting a bit angry with yourself, and you're thinking, almost on a revenge trade because you missed that big move in gold. So you've now decided, well, gold must be overbought. I'm going to sell gold. So you're now in a short position into a market which you know is trending higher, into a market that you know you should actually be long, but because you're upset with yourself for missing that opportunity, you end up selling it because you think it's gone up so high. You're almost desperate now to make a profit out of gold, having missed the opportunity. And of course, what happens? Gold continues to go up because it's in a bull trend. It may pull back a tiny bit when you sell it. You may think, yeah, great, I'm right, and then boom, takes off. I don't know about you, that's happened to me so often. I end up being short into a market which I knew I needed to be long because it was trending higher. So, that's something that you definitely don't want to do. So you've got to be patient, wait for gold to pull back to the next support level. Okay, maybe that support level will be way higher than the entry level that you should have got in the first place that you missed, but at least when the market pulls back again, you can get in when it hits a support level, and you will eventually be long into a market that is trending higher. Don't enter a trade until it has been well researched. I get up in the morning. Well, I have a discipline whereby I have to get up in the morning, I have to write my analysis for my subscribers, and I have to deliver it before the European Open. So I try not to have too many positions on before that, so that I'm not looking for a reason that my position is right, and I'm sort of unbiased, and I'm just looking at the analysis, taking the analysis on board, and making my judgment on that purely without any bias towards a position that I have. Now, I do actually recommend that you do your own analysis, that you come up with your own trade ideas, because that's the way you'll be most confident. And now, obviously, I do provide a signal service, so you might think, well, that's a funny thing to say for a guy like this who's probably trying to sell me his service. A lot of my subscribers are professional traders. They've been doing this for a very long time. They're very, very good traders, and they can spot their own trade ideas, but they subscribe to my service because it just gives them that extra level of confidence. They may have spotted a trade opportunity if I've spotted a trade opportunity as well, and it might be from a different approach, it might be for a different reason, but it just gives them that extra confidence to execute the trade, and then when the trade goes well, they're happy. But they do their own analysis, and I do suggest that you do learn to do that. And if you want to learn my techniques, I do actually have a course. Contact me, and I can I'll actually give you a discount if you mention that you've seen me promoting the course in this video. Contact me, and I'll send you a link for a discount, and you can sign up for that. It really is a good course, and you can learn basically all my technical analysis techniques in 9 modules. Okay, next, be patient. When you've done all the work and you finally entered a trade and you've set your stop loss and you've set your target, I actually recommend going away from the screen. Don't keep looking at it on the screen. Don't keep looking at it on your phone. Go off, walk the dog, whatever you need to do. Go to the gym. I don't know, whatever your hobby is or anything. Read a book, watch a movie, anything. But trade watching doesn't work for me. The market will move around. You know the way markets move. In the end, they'll freak you out, and you'll decide to get out of the position too early. Maybe you'll take the profit too early. Wait. If you've set a target, if you've got a good reason for that target, then wait for the price to be hit. You must always use a stop loss. I think I mentioned earlier on that I've recorded a video about my 18 reasons why you have to use a stop loss. I've written an ebook. Click the link in the description below, and you can get my series of 6 free ebooks. And one of them is 18 reasons why you must use a stop loss. So you must use a stop loss, and you must never move the price of that stop loss further away from your entry point. Once you've decided on where your stop loss should be, stick to it. Don't touch it. Only time you should ever move your stop loss is when you're moving it in the direction of the profit, to protect the profit, and that's called a trailing stop. Never under any condition add to a losing trade. So if you decided I'm going to buy it here, I'm going to put my stop loss here, wait, let the trade play out. If the stop loss gets hit, you've lost your 1%, doesn't matter, move on. Don't think, right, I'm going to take the stop loss out and I'm going to actually add to the position now. I thought it was a good buy up here, I'm going to add some more. If people do that, they keep adding to a losing position, desperate in the hope that the market's going to turn around and reverse, and they end up blowing a massive hole in their account. Keep a trading journal. Here's another point. Keep a trading journal. I must admit, I'm not good at this. I have written all my rules out, which I suppose in some ways is a summary of my trading journal. You should. It doesn't have to be a detailed description. At the end of the day, you've done 3 or 4 trades. Make a quick note. What went right, what went wrong, what did you do well, what did you do badly? And at the end of the week, have a quick read through. Do that every week, and you'll see patterns in what you're doing well and in what you're doing wrong, and it's a good way to learn. When you suffer a severe loss, maybe when you've had 3, 4, 5 trades in a row lose, you may have lost somewhere between 7, 8, 9, 10%. Just take a break. Your mind's not going to be in the right place. You don't want to get into that revenge trading attitude. You don't want to get into that. You don't want to be in a panic where you think, I've got to make this money back quickly. You calm yourself down. If you've been consistent before, you know you can be consistent again. Maybe these conditions are not right. Maybe you're good at trading trends. You're not good at trading when a market is moving in a sideways direction, which markets often do. But maybe the conditions are just not right for you. If you can identify that, take a step back, maybe take a day or two off, get your head straight, and then come back to it. For the same reason, actually, if you've had a really good run and you've done particularly well, these good runs, they happen to us all, but they don't tend to stay forever. Of course, we all have our swings. If you've had a really good run, you've done extremely well, you've made a great profit, it might actually be a really good time to take a break. Pat yourself on the back, take a break, and don't get too greedy. This is the problem. You get overconfident, you get greedy, you think you've mastered it, you think that's it, you're going to be a billionaire next year, and of course, that's when you're at your most vulnerable point. Your discipline goes out the window, you start taking too much risk, you're overconfident, and before you know what, you've blown a huge amount of that profit. Don't vary your trading size. I never know which trade's going to work and which trade is not going to work. I think I do. I might see 6 trading opportunities and I might think, oh, those 2 look better than the other 4, so I'm going to risk more. I'm going to risk 4% on those, and I'm going to risk 1% on the other ones. So often I've done that, and I thought that I know which trades are going to work and which trades are not going to work, and unfortunately I've been wrong. If the 2 trades that you're risking 4% on lose, you're going to lose 8%. And if the 4 trades that you thought were going to win, you may only be making 1.5% on those. Whatever the maths is, don't end up putting a big hole in your account because you've risked more on a couple of trades than you have on the other ones. And often it's right to have no position. You don't have to be in a position all the time. You can't possibly know where the markets are going to go. There can't possibly be good trading opportunities constantly. There can't be trades that meet your criteria all day, every day. So be happy to not have a position. Often no position is the right position. Wait for the opportunities to come to you. Okay, these are summaries of the most important points I have in my 21 rules of trading. I'm not going to go on to the end. What you can do is now click on that link in the description box, sign up for my ebooks, sign up for this one, and answer a few questions for me about your trading, and then book that mentor session. I look forward to talking to you. And if you've enjoyed this video, please do like, share, make sure you're subscribed, and hit that notification bell. Okay, thanks so much for that. I hope you found it useful. And also, I do value your comments. So anything that you have to say about this video, please stick it in the comments box and I will reply to you.